Hello and welcome to Moneylife. This is Sucheta Dilal. Most of us are grappling with the after effects of the Iran war. People are queuing up with gas cylinders, and we're still trying to figure out what the ripple effects of this war is going to be on agriculture, electronics, and in the middle of all this, for many middle class Indians, there is a personal worry that overshadows everything else, all the headlines. And this is the fading promise of health delivery. God forbid you have someone in hospital, doesn't matter how long you've been paying health insurance, it is not a comfort. In fact, it is a scare. Insurance premiums for health have surged between 50% to 200% in just 3 years, and many policyholders are routinely saying that claims are rejected or partially paid. They end up paying huge amounts outside of the insurance cover. So, what was sold to a family as protection is turning into a source of added anxiety, that too, well, illness strikes. Now, we have an independent regulator. You have the Insurance Regulatory Development Authority of India, an independent watchdog, but it rarely ever engages with customers, civil society groups, or even listens to bank unions when it comes to mis-selling. And I've talked about this in a previous video blog. So, IRDAI, as it's called in short, usually reacts only after there is public outrage and lots of people have been cheated and angry. So, policy holders who are paying premiums faithfully and trust that the system will deliver in a crisis are confronted with delayed authorization, opaque rejection, and above all, no effective ombudsman. In fact, just yesterday we heard from someone who says the ombudsman hadn't even read the points that he had made, and he's in a loop. While there is a rejection, he doesn't even know where to go back to. Now, this is one part. The other is gross mis-selling and misrepresentation, which is commonplace. We have said this before, banks have been major distributors of insurance products. They were trusted by customers and they have been allowed to sell unsuitable products that earn them high commissions through bank insurance or simply arm twist people. You want a home loan, you buy an insurance from where your lender tells you to buy it. And this has been going on for years. The Bank Officers Union has complained repeatedly. Neither IRDAI nor the Reserve Bank bothered to listen until February 2026. So I've covered this recently. The RBI has issued draft guidelines banning incentives. These are not complete, mind you. It's not that it's going to stop all mis-selling, but ban on incentive for forced bundling. It's going to talk about dark patterns, mis-selling. It wants full refunds when there are violations which are proven. Draft. So it's not yet rule of law, but there is a glimmer of hope somewhere in the horizon. Meanwhile, IRDA also did its bit in Jan 2025. So it capped annual premium hikes for senior citizens at 10%. So without prior approval, the hike cannot be more than 10%. It barred unilateral withdrawal for senior specific products and insisted that any increase will have to be justified by actuaries with credible claims data. It also is pushing for standardized hospital packages, which is not going to happen, and I'll tell you why. Now, IRDA says a lot of things, directives, what it wants, what it expects. So it also mandates cashless authorization. So authorization has to happen within an hour and discharge clearance within 3 hours. In practice, enforcement is so weak. And this is evident from a survey by local circles that happened entirely a year after the new rules. Okay, so in March 2026, local circles polled 54,000 policyholders across 323 districts. What did it reveal? A big gap between regulatory intent and reality. 70% of the people polled reported premium rise of 50 to 200%, which I've said earlier, in 3 years. Only 10% saw increases that were below 25% or any reduction. In fact, I wonder who the people are who had reductions. What was more alarming is that 50% faced full or partial claims rejection. Nearly 10% had to fight for settlement, which means more anxiety in the middle of an illness, middle of an already anxious period. naturally complaints rise. So complaints have jumped 41% to 1,37,361 in FY 24-25. What do these numbers show? That IRDA, the insurance regulator, is ineffective. Now let's look at a few real stories. So Prashant Rane writes to me saying that he has been covered under health insurance since 2017 under Oriental Insurance and PNB Group policy. He has watched his premiums climb in the name of medical inflation, but benefits stay frozen at 2017 levels. So he was particularly looking at one case. He wanted total knee replacement, but his insurer has capped it at 1.1 lakh, which he says is half what it would cost in Mumbai today. What is worse, everybody wants modern surgery, so he wants to go for robotic surgery, which is now standard, but the insurer has told him it'll be limited to 10% of the sum insured. So what was the point of the health insurance in the first place if you cannot keep pace with technology? But they say that they will only allow what was around at the time when the insurance was taken. So Mr. Rane says they charge 2026 premiums but are giving 2019 benefits because the benefits are not rising in line with the increase in premium. Now, this is something that IRDA is supposed to look at without anyone complaining, without anyone writing. But the insurance regulator is apparently not accountable to anyone. Advocate Mohammad Afzal has another case. He's an activist, he's a lawyer. He's held a United India policy for 30 years. He was also refused robotic knee replacement surgery for his wife. The insurer was only willing to cover conventional techniques because that is what existed when the policy was written. He also says hospitals demand security deposits even for cashless cases. Consumer activist Abhay Datar had another issue. Remember, these are all savvy people that I'm quoting here. He had a star health policy which initially offered to pay only reasonable charges for a retina detachment surgery. Now, since he is knowledgeable, he wrote back to the nodal officer and said, please tell me which hospital in South Bombay will offer what you consider are reasonable charges. Obviously, they had no answer, so they paid his full claim within a week. His experience shows that partial rejections can collapse when challenged by people who know the rules. Question is how many people know the rules? You can of course come to Moneylife Foundation and take advice from Mr. Datta. It is free, but this is not what happens to ordinary people. India's coverage gap makes the health insurance crisis so much more acute. A study by the National Insurance Academy put the health protection gap at 73%. This leaves 400 million Indians uninsured. Now, corporate employer sponsored programs, which is large private companies which really keep paying whatever the premium, pay the charges, this covers only 4% of the population. Mind you, very few people are in that happy place or are government employees, whatever. This usually works as promised. 12% of India's population, already very low, have private retail policies, which is the segment captured by local circles. They face the sharpest disappointment. Now, like many other countries, India has loftily announced the Ayushman Bharat PMJ scheme and has said that it reaches 51% of low income households with 5 lakh annual hospitalization cover. We all welcomed it. We thought it was wonderful. But if you read or Google or look at AI, it is caught in this quagmire of government not paying hospitals, scams all over the place. So the cap itself, first of all, has not kept pace with costs, excludes many middle class ailments, and there's complaints about access and availability because many private hospitals have stopped offering it because they haven't got paid. After all, private hospitals are not running a charity. Now, even for those who buy private cover, it's reached a stage where the question is twofold. One is how much is enough and whether you need insurance at all. So, a decade ago, 5 lakhs seemed adequate for a middle class family. Now it's barely a floor. 1 week in a metro ICU can cost between 6 to 8 lakhs. God forbid you have to go in for cancer surgery or treatment, organ transplant, or a heart bypass. The cost could easily go to 25 lakhs including rehabilitation. Experts now recommend that a young nuclear family, should have 10 to 25 lakh insurance. It should be 50 lakh for anyone with pre-existing conditions. You have to factor in 12 to 15% annual medical inflation, which in most cases far outruns your annual increase in wages. Now, these premiums reflect a new reality. Basic 10 lakh cover for a 30-year-old would cost 12,000 to 16,000 a year. Family floater for the same sum would cost 18 to 35,000 depending on the city. And a 50 lakh to 1 lakh family floater can exceed 30 to 50,000 annually with the rates constantly galloping. Okay? Then people ask you to top it up because this may not be enough. There are charges that you may not get. After that, you file a claim. There's a 40% chance, as shown by local circles, that the hospital bill will be rejected or trimmed, which means that you need a few lakh more to pay for it. Policies routinely exclude many real world costs. Private hospitals routinely overcharge insured patients, order unnecessary tests, inflate bills because a third party is paying, and neither the insurers nor the regulator has been able to break through. Hospital pricing remains opaque and unregulated. In fact, the 2010 Clinical Establishments Act has a provision for standardized rates, which IRDA would like hospitals to adopt, but it has been challenged before the Supreme Court and litigation drags on. In fact, many consumer organizations are also in court. But efforts to force accountability on hospitals and insurers are caught in this legal blind. Private hospitals are under no legal obligation to maintain uniform tariffs, and the government is empowered to mandate a range of rates for medical services under the Act. But there are five separate petitions in the Supreme Court which have challenged the constitutional validity of that provision, says a consumer activist. Meanwhile, NGOs such as Consumer Voice, Jan Swasthya Abhiyan, Veterans Forum have filed litigation seeking implementation of standard rates, and the litigation is dragging through the judicial system because nobody is in a hurry to bother with middle class problems. So the impact on ordinary people is circular and debilitating. Hospitals overcharge insured patients. So you have an insurance, you pay more. Total cost of claims goes up for the insurance company. So insurers respond by raising premiums and tightening claim security, which means more rejections and all kinds of excuses to delay or reject. Those who don't know quietly pay up, don't fight back, which is again for the insurer. Policyholders end up paying more for less because premiums are galloping, benefits are not. The only beneficiaries in all this are corporate hospital chains, but they are unaffected primarily because there's a shortage. So there's a demand for their service which far exceeds supply, and a small segment of people with company paid insurance continue to avail of services irrespective of cost. The rest of the people who pay through their salaries really suffer. This broken incentive triangle of hospitals maximizing revenue, insurers minimizing payouts, and policyholders trapped between has led to serious questions about whether health insurance makes any sense at all. You can ask questions, but for a young person with a family, the alternative is dangerous. Single heart surgery, cancer treatment can wipe out 25 to 30 lakhs, which is years of savings for a young family, which today usually has a mortgage and school fees to think about. So experts not only talk about a base insurance, but they also want super top ups to cover for these catastrophic expenses. And yet, all of it is unreliable. So they suggest have a separate dedicated medical corpus to absorb 40% rejection risk. I mean, this is crazy, isn't it? How much are you going to guard against? And with all those guards, are you still safe? It is so clear that the model is structurally flawed. Medical inflation is chronically high, cannot continue in a country hoping to be Viksit. Regulatory enforcement is patchy. We need to remove the regulator from Hyderabad, get him to a city where more people can ask questions, Bombay or Delhi, maybe right under the finance ministry. Make the regulator more accountable, more active, make the ombudsman more active, Unless all this is going to happen, 73% of the people who remain uncovered are going to wonder whether it is worth it at all. If you're going to live depending on your karma, you might as well not waste money on insurance premium, is what people are saying, rightly or wrongly. Now, nations that have achieved universal coverage have relied on national risk pooling, not the Ayushman Bharat type, which has lofty ideals but hasn't worked in practice. So there are income linked contributions, statutorily defined benefits. It has worked in certain well developed countries. That is the hope and the aspiration which we middle class Indians have, but we have very few options. For us, the issue is not about abstract policy debate. It's a difference between emerging from a serious illness with our savings intact or sliding into debt, including asset sales. Believe me, middle class Indians who earn pretty well have had to sell assets, sell that second flat they had or a plot of land to pay for their medical treatment. Until regulators, hospitals, and insurers are forced into genuine accountability, millions of families will live with the stress of dealing with a safety net which is full of holes. And this is more worrying for many of us than the consequences of the war with Iran. If you agree, raise your voice, because unless more people make a noise, nothing's going to change. Thank you.